Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro-dollar. A combined key reversal down and bearish engulfing pattern just yesterday. But before you get too carried away, this was a third countering move, moving against the previous session's combined counter to the counter, key reversal up and bullish engulfing pattern. The market dropped down once more to the October low support at 115.22, where it held. Being a third countering move, especially two opposing key reversals within 1 week, well, goes more to show the high level of intraday indecision going on here and the size and violence of the countering moves than it does as to any clear direction. Above, we still have the short moving average currently at 116.05 and the November 2020 low at 116.02. Overall, we're still within the follow-on lower from the recent cat's ears pattern formed over the July to September action plus the more recent weekly key reversal down from last week. In the cat's ears pattern, the neckline above is made up from the combination of the 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94 and a neckline currently 116.81 of the August-September 2020 head and shoulders top. Plus now the declining short medium moving average, currently 116.84, that's coming in there as well. For the cat's ears pattern, we still have a potential target X below in the 114.5 area. The key to achieving this target will be the market maintaining itself below the break line above, or lines in this case. All this comes in the shadow of September's monthly key reversal down. Now looking at the even bigger picture, we are still nicely moving down in between the upper time, currently 117.27, and the middle time, currently 113.57, of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action. So far today, the market's holding for the moment just under the limited resistance from the 2019 high at 115.70 and the October low at 115.22. Cable, aka sterling against the US dollar. An immediate countering key reversal down and bearish long black Mariposa yesterday. This after the previous session's bullish engulfing pattern. The action also destroyed the idea that the prior 2 days may have been a pipe bottom. The market once again punched down through and closed well below the broken lower trend line currently at 136.77 of the July to date broken sideways triangle. Interestingly, this pattern's impact is now greatly reduced, and I suspect it was the overhead sidelining short medium moving average, currently 137.02, with the slowly declining medium moving average resistance, currently 137.58, just above that, which had capped recent rises, including yesterday. We now seem to have the targets lower down for the recent July to date broken sideways triangle back in the frame. The market had already achieved the initial target X below, that's in the 134.90 area, but the secondary target X1 in the 132.65 area is still there, and as I have often stated, harder to reach. So perhaps just reaching the original target X may have been enough. Well, we'll see. I was thinking of retiring target X1, but I reckon I'll keep it on for a bit longer. A couple of final points. Now I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down and yesterday's action revitalized the idea, enough that I've placed some potential targets for this pattern below. An initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. Finally, I've drawn a first bearish Andrews pitchfork here for, well, quite some time. It is for the early September to late October action. Currently the market is in between the upper time overhead, currently 137.11, and the middle time below, currently 133.61. So far today, an attempt for a follow-on lower, down through the September 2020 high at 134.83, as well as the low of yesterday, and approaching the September 2021 low at 134.10. Euro sterling. An immediate countering key reversal up and bullish engulfing pattern yesterday. This opposed the previous session's reactionary key reversal down. The base was a combination of the old March low at 84.70 and more importantly the short moving average, currently at 84.67. Prices pushed up through the important flatlining short medium moving average, currently 85.26, and the medium moving average, currently 85.34. Finally halting and closing a short distance over. More I suspect due to the markets recognizing just how much it had done in one day than at any specific resistance. Overhead we now have the declining long moving average, currently 85.82, as well as the that's basically the last of the moving averages above before we start looking once again at the April 2020 low at 86.69. However, I do note the September highs in the 86.13 area. Finally, I know that I retired the idea of the June to date expanding broadening wedge pattern as the lower bear channel line, currently 8300, had moved too far away for the market to utilize and support such a pattern. However, I'm minded to look at this pattern again just in case, but with a shallower trend line on the bottom and based from early August. Hence I've drawn a new trend line currently at 83.95 for this period, and we'll consider relabeling the chart in the next little while. So far today, a further move higher and test up over the long moving average, currently 85.82. Beyond that, well, we have the September highs at 86.13 and then the April 2020 low at 86.99. US dollar against the Indian rupee. A bullish thrusting and possible hammer pattern as well yesterday. This was all due to the market initially pushing lower, punching down through the broken downtrend and trendline combination of the April 2020 to date move, currently at 74.36, plus the slowly rising medium moving average, currently 74.30, and the 50% Fibonacci line from the February to April 2020 move at 74.26. It was only the slowly rising short medium moving average, currently 74.22, that finally halted the decline, though obviously eroded by the previously mentioned supports, and caused the market then to turn back round, such that prices halted just below the previously highlighted 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. Going back to the previously mentioned broken trendline and trendline combination, downtrend and trendline combination of the April 2020 to date move, as I say currently at 74.36. This makes up the large April 2020 to date sideways triangle. Now this triangle, broken on the top side, originally gave an initial topside target X in the 76.36 area and a secondary target in the 77.79 area. Now these were based on two big assumptions. Firstly, that the break higher up and away from the sideways triangle was not a false break. Secondly, that the hesitation was seen since mid-October may be a type of bull flag or bullish halfway hesitation type action. These are big assumptions, and it very much looks as if these assumptions may be false. Watch this space on this, as below the short medium moving average we have little until the 50% Fibonacci line for 2021 at 73.84. And the rising long moving average currently 73.81. So far today, the market has reverted back down, punching a fresh hole back into the old sideways triangle and down through the medium moving average. However, the eroding effect of both the broken downtrend, the medium moving average, and the 50% Fibonacci line have once again caused an eroding effect, with prices halting this time just before the short medium moving average. Potentially an immediate countering large bearish engulfing pattern, if only just. US dollar against the Brazilian real. A small bullish harami yesterday. On the face of it, an unexpected action after the previous session's huge key reversal down and bearish long black Marobozo. However, if you look at where we opened, you would see it was back up within the nascent early September to date bull channel, currently 559.38 to 588.86. And that seemed actually to be recently taking over the running higher at a more acute angle. It seems the influence of this bull channel is not over. However, neither is the late July to late August bullish shift pitch, which had done a lot to get the markets up where we are now. We are currently in between the upper tine, currently 566.5, and the lower tine, currently 547.17. One final point. The threat of a weekly key reversal this week has severely diminished, unless we have a major move lower today. US dollar against the Mexican peso. An indecisive spinning top yesterday, so there was no immediate follow-on lower to the previous session's huge key reversal down. It was nevertheless the second consecutive close below the 50% Fibonacci line for the whole of the 2021 move at 20.5849. It all leaves a question open on whether the September to date action is a bullish halfway hesitation or a topping action. It also leaves open whether the market will try for target X1 in the 21-23.5 area. Now, this is the secondary topside target for the June to date descending triangle, one usually hard to reach. We'd already reached the primary target X in the 20.8920 area. Now, to counter this implied bearishness, you should be aware that the market will need to do a hell of a lot more than work on the downside, to negate last week's weekly key reversal up. In fact, you would have to see threats made to the upper trend line of the recent broken descending triangle, currently 20.1183, plus a mess of moving averages in between, to even get my attention on that. This is the thing to remember. All the bearish action yesterday and going forward will be in the shadow of the weekly key reversal up made last week. So far today, a reactionary attempt higher, up over the 50% Fibonacci line at 20.5849 and over the 38.2% Fibonacci line at 20.6062, but not as yet stabilizing over these two. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.